The following is an update and technical analysis on Helmerich and Payne Incorporated, a company of the energy sector in oil and gas drilling. Here off the daily level where I'd mentioned on the 4th of June 2023, we were trading spot price $33.26 off this nice, clean, divergent low, bullish and or positive divergences really amongst all three technical momentum indicators, with already a bullish crossover in the moving average convergence. Nice green hillside here on the oscillator histogram, starting to churn to the upside in a nice clean uptrend looking state. And it was pivotal to really wait for this primary reactionary high uptrend line, downtrend line, call it a bullish falling wedge pattern coinciding with the 50 exponential and 50-day moving average hovering in and up above, call it a dual line of support. Watch for a key breakout. Bounces were getting a lot more larger, price action with cadence and rhythmic tone. Just a great inflection point, and here is the update. And the entire trade thus far from 33.26 spot price was good for right up to the 200-day moving averages there, and that was good for 24.92% in gains. And we are slightly testing that 200-day moving average right up above. Well, we had a West Texas Intermediate crude oil breakout, hitting my fourth target there, where there was a huge incentive and momentum trade built upon an OPEC and Saudi cut in production, coinciding with the Biden administration draining the SPR reserves there, and talk about a dual line of catalyst starting to head up above, where we had the Russian crude cut oil output as well. And I'll take you into for a brief analysis back to the CL crude oil futures here, where we are starting to test and knock on the door of not only the 200-day moving average, but again, the most pivotal inflection point, the much larger inflection point. I can't stress enough how big of a level of significance is this off this reactionary high primary downtrend line, cuts right through the gap of July of 2022. Call it a multi-year price resistance zone, and you just have a multitude of reactionary highs and a ton of reaction all across the board there, coinciding with a big key level here at the 77, call it 77.84 236 fibs retracement. You have the 200-day moving average and the primary downtrend line, reactionary high downtrend line. That is a triple line of inflection points, and it looks like we could break above. And if bull traders, long traders, crude bulls take this level out, pop that level, I would only imagine a vast amount of short covering and long traders stepping in for the all-in inflation trade to the upside, knocking on that first target 82.61 price resistance. A nice clean reactionary highs really across the board. That is a very key significant level, which would even prompt to even have a nice short trade set up there, especially for an active and day trader. That would probably I would only envision some sort of reaction amongst that key inflection point, whether it's small or big, but anything's possible. We could surge right through it, cut that thing right through, and have a big move to the upside, as powerful as some of these near-term bullish and positive divergences were. You have Chastix 1033 putting in a much larger, big inflection zone here, where it could even churn to the upside. I love using this Chastix indicator as a near-term, ultra zoomed in, increases the odds of something significant playing out, whereas you have a nice clean bullish crossover, healthy technical momentum indicator thresholds all breaking through the zero lines and pouring health right back into these technical momentum indicators, whereas we had a bearish that bullish falling wedge pattern ended up breaking right up above that, back tested that 50-day moving average, and it has been stepping higher since. So you could even potentially play out a potential bull flag situation there, a bull flag scenario. We'll see what happens. But again, this is the monumental key inflection point that all short traders, long traders, I can all but guarantee you, institutions, algorithms, and machines will be paying attention to, called that triple line of inflection points. You could additionally even take a nice, an aggressive, which would be an aggressive short trade setup here, especially if you take some of those gains and make it a free trade there. Pretty significant level where the risk reward ratio could favor a move to the downside if we checked it amongst that key inflection point once we really go on to test it at its key point there. So we'll see what happens. I'll keep you updated if I see any more significance here in the charts.